Live from Paris, Matthew Warren is with us now for all of the day's business news. Hello there, Matthew.
Hi, Catherine.
We're going to start in sunny Brazil, which has got reason to celebrate. It's secured one of the world's top economic jobs, or so we think.
Yes, well, that's right. According to well-placed sources, as they're called, Roberto Azevedo will be the new head of the World Trade Organization, so they're happy about that in Brazil. Now, this will be confirmed later this Wednesday, but it was a tight race between him and Herminio Blanco from Mexico. Well, Mr. Azevedo now faces a tough job to restore the relevance of the global body.
He's set to become the first South American head of the WTO. Roberto Azevedo, Brazil's ambassador to the organisation, has vowed to spearhead a new approach.
Some people mistake coming from the system from continuing to do what we have been doing. On the contrary, I think what I propose we do is that we look at things in a different way, that we look at this with a fresh perspective.
Azevedo beat the US-backed candidate Herminio Blanco of Mexico to the WTO's top job. The Brazilian's insider experience as a negotiator and consensus builder appears to have clinched the contest for him. He says he wants a tailored approach to free trade to help developing countries. One major goal, he argues, should be to identify specific trade opportunities for them, rather than focusing so much on capacity building. With Pascal Ami's 8 years ending, Azevedo's biggest challenge will be to revive the stalled Doha round of trade talks. Launched in 2001, they've sparked clashes between the EU, China, India and the United States. Azevedo's first major appearance on the world stage will be a ministerial meeting in Bali in December.
Well, while we're on the subject of world trade, a spat between China and Europe looks to be moving up a notch this Wednesday. Matthew, tell us more.
Yes, well, the European Union could be about to slap import duties on solar panel equipment made in China. Now, we're going to hear more about this later today. Now, this is all because European manufacturers say that Chinese firms have flooded the market with low-price panels, and that's put many of them out of business. Well, to find out more about all of this, we can cross over to our correspondent in Brussels, Frederic Simon. Thanks for joining us, Frederic. Can I start by asking you, is this just a protectionist move by Europe?
Well, certainly it will be interpreted as a protectionist move by China when the European Commission launches this case today. The tariffs that Europe will likely slap on Chinese firms are mainly aimed at protecting German manufacturers who have suffered badly from a surge in exports of solar panels from China. Chinese production has roughly quadrupled over the past years to reach the equivalent of the entire world demand for solar panels. And Europe, Germany in particular, wants to make sure it can retain a part of that market. EU producers say Chinese companies have captured more than 80% of the European market from almost nothing a few years ago. So the Commission in Brussels here thinks there is clear evidence of dumping.
So that's about solar panels. It's Catherine Nicholson here in the studio, Frederic. That's not the only issue, though, causing problems in the trade relationship, is it?
Yes, indeed, and there are tensions also in the telecoms and mobile phone sector. A Chinese company, Huawei, for instance, has developed smartphones which are just as good as Samsung's, and they're hoping to get a bigger share of the European market in the coming years. But here too, Chinese companies are suspected of benefiting from state subsidies, and the European Commission is looking at this with suspicion too. Now, the move on solar panels opens the door for a negotiated solution to be found with Beijing before December this year, and this could result in a settlement of both cases simultaneously. What the European Commission is trying to aim for is to get a better deal for European companies trying to increase their market share in China in a sort of give-and-take exercise.
Thank you very much, Frederic Simon, reporting there for us from Brussels. Well, we're going to stay with China because some trade figures have been released today. And Matthew, I think they were better than expected.
That's right. Investors liked the look of these because the country recorded a trade surplus in April of $18.2 billion. Now, you might expect that always to happen. But in fact, in March, the country actually made a rare trade deficit. Now, what was also encouraging here were both imports and exports up strongly and better than forecast. So that's seen as a good sign for the country's economy.
OK, well, let's take a look then at what's going on the market.
Yeah, well, that news out of China on trade figures is one of the elements that's been providing a bit of cheer to the markets over in Asia. They're mostly up, as you can see there. Just the Kospi in South Korea slightly down. The Shanghai Composite there up at 0.4%. Well, let's stay with China now for some of the day's company news. And profits almost tripled at the Chinese e-commerce giant Alibaba in the last 3 months of 2012. Those figures were revealed in a regulatory filing by Yahoo, which owns a 24% stake in the company. Alibaba is believed to be planning a stock market listing later this year or early next.
Better takings at its theme parks lifted profits at Walt Disney. Rising film and TV revenues also helped the results. Now, profits were up by a third in the first 3 months of the year. The company's also hoping its Star Wars franchise will provide a further boost. It's planning a new film every year from 2015.
But profits at Deutsche Telekom were down. The company reported earnings of 4.3 billion euros. That was slightly ahead of expectations, though. The German company said that those results were hit by investments in Europe, but it said it's sticking to its full-year targets.
Now then, we've got news from a big pharmaceutical company that could mean fewer spam emails in our inbox, which is good news for everyone, I think,
yes,
Matthew.
That's
but
right.
What's behind that?
Sounds a bit strange, this. Let me explain. The American pharma giant Pfizer is well known for several products, but one of those is Viagra, the male sexual aid, shall we call it now.
Very well-known little blue pill, isn't it?
That's right. Now, they say that they are planning to sell Viagra online. Now, you might think it's already sold online due to the number of emails that lots of people get in their inbox about this product, but in fact those are counterfeits. They're not the real thing, and Pfizer is not surprisingly perhaps hoping to clamp down on that. So as you said, let's hope that one effect of all of that could be fewer of those annoying emails.
I know, every time I receive those I just think this is very bad marketing by the spammers. They don't know that I'm a lady.
They're indiscriminate. Yeah.
Okay, we're coming back here to France for a much more sensible story. Most people today and tomorrow are on public holidays here in France. This year though, Matthew, the pattern of public holidays, how they fall, could actually impact on France's poor old fragile economy.
Well, that's right. Now, there are 11 public holidays in total each year here in France, and of course they can fall both on weekdays and at the weekend, and it just happens that this year 10 of them are falling during the week. Great news for people getting a day off, but
people who have normal jobs, not like us.
Absolutely, but not so good perhaps for the economy. It means actually a reduction in the number of working days overall this year. That will be 251 working days in 2013 versus 2 more than that. Now, what's the impact? Well, the National Statistics Agency says that when you take all this into account, there could be a €2 billion hit on the economy. It's a very small amount. It's about 0.1%, but 0.1% is the difference perhaps just between France going into or out of recession this year. So we will see how that plays out in the numbers.
OK, the government will be watching that very closely, I'm sure. Thanks very much, Matthew Warren, with all of the day's business news. And we are going to wrap up this half hour of news, but do stay with us. Stuart Norvell back here in the newsroom with you in a couple of minutes with more news and headlines.